After years of an oil price downturn, Exxon Mobil is doing something it hasn't done in quite a while. It is increasing its spending and its investment. It's the first major oil company to do so, marking a potential turning point for that industry. But as Jackie DeAngelis reports, the move isn't without risk.
When Exxon Mobil speaks, Wall Street listens. And Exxon is talking with its wallet, confirming it will spend $22 billion on capital expenditures this year. That number up a bit from its projection. Now that crude prices seem stable, over $50 a barrel after a low of nearly $26 last year, Exxon seems to feel more confident about investing, even in short-cycle projects like the Permian Basin and the Bakken.
In 2017, we expect to spend $22 billion. This allows us to advance investments and adjust either up or down to commodity prices, price conditions, and cash flow. More than one-third of the CapEx will be invested in advancing our large inventory of short-cycle opportunities. They are primarily Permian and Bakken unconventional plays and short-cycle conventional work programs. This component of our investment plan is expected to generate positive cash flow less than 3 years after initial investment.
But risks continue to plague the industry. While OPEC members have trimmed production and their cooperation has impressed markets, concerns about increases in U.S., Russian, and Nigerian production worry the market. That means that the delicate dance between supply and demand will continue, and if big oil acts over aggressively, the danger is it could flood the market with oil once again.
We use a proven development planning process to enhance commercial potential and competitiveness over a range of economic conditions.
Today, the Department of Energy released its weekly crude inventory data. In that report, U.S. production is holding over 9 million barrels a day, increasing steadily over the course of the last year. Consider that OPEC's cut is a max of nearly 2 million barrels per day. It's a reduction that could easily be eclipsed by non-OPEC producers. What this tells us is that players like Exxon, Chevron, Hess, and others are shouldering a big responsibility. Their actions could swing a market that has struggled to find its footing. For Nightly Business Report, I'm Jackie DeAngelis.